Hi, thanks so much for joining in. You're watching the Mutual Fund Show on NDTV Profit, and my name is Alex Matthew. This show gets you actionable insight on everything mutual fund related, and it is, in fact, the last edition of the Mutual Fund Show in 2024. What a year it's been for the mutual fund industry. In fact, let's start with a conversation about that. The mutual fund industry, I think this year you can say for sure, has been the year of the SIP, because you've had very consistent flows into mutual funds through this route. Every year since July of last year, you've seen a record apart from this one figure where you saw a bit of a drop off, and just by a couple of crore rupees. But an interesting talking point has emerged in the recent past. The fact that this is gross inflows, the net inflows, which also account for cancellation of SIPs, is much lower. In fact, in the recent times, it's been around 40%, in certain cases even less than 40% of the gross. We'll speak about that in some time. But let's talk about the overall flows into mutual funds, and I'm talking about a few categories here. You have active equity, which has stood out as the preferred vehicle for investors in 2024, and that continues to be the case. 3.5 lakh crore rupees being invested mostly by investors in the retail category into actively managed equity mutual funds. You also had hybrid mutual funds at quite a bit of inflows, and particularly in the multi-asset category, because of the better taxation that is available now in that particular scheme. Debt mutual funds saw inflows largely from institutions, not too much from the retail side, and that is evident in the fact that as a percentage of overall assets under management, debt mutual funds have actually declined while the other two categories have inched up just a bit. Let's also drive home the point on inflows into equity category. Let's pull up the slide, and we're talking about a consistent investment across the board. Of course, a large part of this coming through in the form of investments into sectoral and thematic, especially in the actively managed equity category. Close to 40% of inflows into that category. Even the hybrid, what I was talking about earlier, you've had more or less consistent inflows apart from a couple of blips here and there. But as I said, the multi-asset category has stood out in terms of investor preference. Let's also talk about one major factor that has played out in the actively managed space, and let's talk about sectoral and thematic, and the fact that it is now the largest category in the actively managed equity space. You know about this. It is in fact something that has gone past the Flexi cap category. What you see on the screen, of course, is the total assets under management, but also take a look at it in terms of the percentage of AUM, which you will see has inched up to 15.2% for sectoral and thematic, compared with 14.3% for Flexi cap as things stand right now. New fund offers, there were quite a few that came through in 2024, and a large number of them in the passive category. So you have nearly 97 at last count in the passive category, and they've managed to garner about 22% of the flows into equity passive I'm talking about. But the other big category where you saw a lot of offerings were the sectoral and thematic categories, where a lot of mutual funds decided to launch themes that you probably haven't heard of before, and which saw a lot of takers. Let's talk about which mutual fund houses stood out in terms of most offerings, and Tata and Mirae Asset have stood out with 19 each. You also had Kotak and Motilal Oswal that each offered about 18 or so. Let's talk about the top performers in a few key categories, and in the large cap space, you had White Oak Capital, Invesco India and DSP that stood out with considerable beat compared with the benchmark, which by the way is a BSE 100. The category average stood at 15%, and that itself is a beat compared with the benchmark. Not something that you hear about every year, because the large cap category is particularly difficult for the fund manager to beat the benchmark. In the mid cap category, you also saw quite a few beats, and it's a 28.6% category average. So chances are that if you invested in mid caps or mid cap mutual funds, you went home with quite a bit of return in 2024. The top, of course, is Motilal Oswal. A lot of inflows into this particular scheme, and the scheme has done incredibly well, an outperformance of over 30%. Not every year that you see something like that happening. Even in the small cap category, you see a couple of schemes that have outperformed in a big way. 19.2%. But the category average, interestingly, is less than the mid-cap category. Even though it's said that the potential for return in the small cap category is considerably higher. Bandhan Invesco also standing along with Motilal Oswal in this category. Even in the Flexi cap category, you see quite a lot of the same names. Motilal Oswal standing out again. It was an underperformer in 2023, but it's ranked at the top in this year, and it has an outperformance of close to 30%. You also have JM Financial, which has stood out. A couple of names that you've probably been used to seeing, Parag Parikh, for example, in this particular category, which has once again garnered the most inflows in this particular category, has not ranked in the top because of its strategy of keeping more cash. It has continued to do that even towards the end of this year. The last category we're talking about, of course, is the sectoral and thematic category. Interestingly, 60% or thereabouts of funds in this category have beaten their benchmark. 40% have not, which is quite telling in my opinion, because you have about 190 schemes in this category, so quite a large number of them have actually failed to beat the benchmark. The top, of course, have managed to beat the benchmark by quite a big margin. So, interesting talking points. Of course, it's been a great year for mutual funds as a whole, but let's get our experts on board. We've got Kshitij Mahajan of Complete Circle and Vishal Dhawan joining in as well. And thank you so much, gentlemen, for taking the time, and wish you both a very, very happy 2025 at the start. So let's talk about a couple of these aspects, right? So the first thing that stood out to me, of course, was the SIP inflows. And my reading, of course, is that it's positive on the gross side. But from speaking to people in the industry, you hear that the net number is much, much lower. So as you head into the new year, what are the trends that you see visible in terms of investor behavior heading into the new year? I'll start with you, Vishal.
Happy New Year to you as well, and to all the audience also. So I think there are a few things clearly which are throwing up. One is that the comfort of investing regularly through an SIP has really caught on. And I think there's a lot of investors who now have understood the benefits of just investing without worrying too much about the way the markets are behaving. And I think if this continues, and we need to see a sharp sort of bear market to truly test this hypothesis, but essentially that once investors have sort of taken a view that you want to put this money away from a really long-term perspective, goals which are far away, your retirement, your education for children, etc. I think it's a big fill-up. As far as the gross versus net numbers are concerned, I think it's a very important differentiation to point out, because what happens is when you replace one fund with another one, either because you feel that you want to change categories or you want to find, you want to move from say an active to a passive fund or vice versa, even if you're keeping your SIP amounts the same, on one side at the gross level, it'll show up as new money, but on the net side, it will probably show as zero, because there is no real new money that is coming in except for what was anyway going on in the category. So I think it's important for investors to understand the difference. Even a 10,000 crore number net is a very healthy number to be coming in. And I think as long as this continues, that's great news. I think what's a little bit concerning, though, is that SIPs continue to see most of the money go to equity only. And I think as investors, you want to be thinking that there are multiple asset classes that you can get into through the mutual fund route, even if you do an SIP. So whether you want to use hybrids, whether you want to use sectoral options, etc. I think the whole category itself of mutual funds allows you to choose what you want. And therefore, I think one of the things that would be nice to see is a lot of more SIPs going to other than equity funds also, because they all have space to sort of take in money on a regular basis, and not all of your money is going to be required long term.
That's a fair point. You want to come in on this as well, Kshitij, very quickly on the SIP point. It's been pointed out that the net number being that low is not alarming because you also have situations where a lot of pauses in SIPs are counted as stoppages, as a result of which you have a significantly lower number. Switches of SIPs are counted as stoppages, as a result of which that affects the overall number. What would you take from that?
Well, good afternoon, Alex. Good afternoon, Vishal. I've been, before starting our own venture, I've been on the asset management side for 11 years. And let me tell you one thing that there have been instances where you see initially the net number used to be low, but right now, like I know a couple of my friends who are in this last quarter, next quarter, they want to reduce the SIP because of some tax planning or whatever. So I'm saying sometime, as you said, number what you perceive is not the right number. I think my sense is 55-60% is the net number for sure, what we are talking about here. And for the new beginner, somebody who's starting new, so there are a lot of new investors are coming to mutual fund fold, and we have been seeing new folios stepping up. Industry is growing at 18-20%, but the SIP portfolio is growing at much faster speed. I think it's growing at much 23-24% at what it's growing at. We see a lot of interest from people from various arena of their life, being different ages, starting SIPs. I see that this is not even 1 or 2% of what 5 year, 10 year down the line, the numbers which we are looking at, and it actually helps people to average out buying of their portfolio. It helps people to have a discipline in terms of how they're approaching. Moreover, now SIPs have not been sold as a monthly saving. It's been sold as a tool to plan a goal, and you should not look at it. It's been communicated by many of colleagues, including you and many others, that unless until you are approaching your goal, keep on reviewing your portfolio. But my sense is this number will step up and your net number will keep on going up, unless and until you have some financial crisis in a country, you have some major job losses in a country, you have some situation like COVID wave one,
Right.
where you see yes, cash flows are not there. Otherwise, my sense is this net number will keep on stepping up, will keep on improving. I'm looking at 2025 net number of 65-70% of what the gross numbers are looking at, and at the same time the trajectory will remain upside only.
Okay, fantastic. I want to jump straight to the categories that I mentioned, where we're talking about actively managed equity mutual fund schemes and the top performers there, because a lot of people are looking at that. A few key talking points. Vishal, I'll come to you first. In the large cap category, average a return of 15%, which is a healthy number. And if you're talking about the BSE 100, then you're talking about even that beating the benchmark. So what stood out to you? Because the top performers, White Oak Capital, this is basis Amphi data, of course, that I'm looking at as of yesterday's NAV. And you have White Oak Capital, Invesco India, and DSP, all with returns of close to 20-21%, beating the benchmark handsomely. And a lot of actively managed large cap mutual funds have beaten the benchmark.
So it's true. I think that it's important to dive into sort of what has happened and how sustainable it is. So one of the things that you will see fairly commonly is that across most outperformers across categories in 2024, you've seen a very strong focus towards a momentum style of investing and a growth style of investing. And therefore, you will see a lot of that playing out in terms of outcomes that have come, because this style of investing is really done well in 2024. The second thing that we need to keep in mind is that in a large cap fund, you are allowed to have up to 20% of your money outside of large caps as well if you choose to. And because mid cap and large cap outperformance has been very significant in 2024, there have been certain benefits that have come to even large cap schemes, which an index would not have been able to get, because the index would not have had any mid cap exposure at all. The third thing that we need to keep in mind is that there are certain sectors that have contributed to how, let's say, the large cap category has done. So one of the common things you'll see across the three names is consumer cyclicals and financial services being some of those beneficiaries of all of this benefit that has played out in the large cap space. So I think as an investor, you want to keep in mind that momentum styles or growth styles have to continue to do well in 2025 for this to continue. Consumer cyclicals or financial services, which contributed to this large outperformance in 24, unless the fund manager actually goes ahead and changes them, need to continue to perform well. And we are in a point where we are starting to see an earnings slowdown happen. And therefore, our suggestion to investors will be that even though you've had 2024, where it looks like active large cap funds have outperformed passives, you want to be very mindful of the fact that this may not be sustainable. And therefore, if you're building your large cap exposure, do very, very actively think about having passive funds in there. If you want, you can add in one active fund if you feel that that's going to add value to you. But we continue to believe that passives, because of their lower cost in that category, are a very, very attractive place for investors to be in.
Yeah, in fact, we are going to talk about passive strategy in tomorrow's show. I'd encourage you to check that out as well. But a couple of interesting talking points in the mid and small cap category, Kshitij, is that the category average of the mid cap category is actually higher than that of the small cap by a couple of percentage points, in fact, close to 3 percentage points. And that's how much can change in just a couple of months or 3 months or 4 months or thereabouts. Towards the end of the year is where you've seen this shift taking place. But the other aspect is, and I'll come to that, actually, I want to talk about Motilal Oswal, but I'll come to that in just a bit. Your thoughts on mid-cap outperformance and the kind of outperformance we've seen. Motilal Oswal mid-cap gains of about 57% in 2024.
Alex, I always say that in a long term, like 1 year can be good for any fund, and Motilal is a great house. I think after Prateek has taken the reins of Motilal as CIO and CEO, things have changed a lot. It's my last employer also, and I was a part of Ramdev sir's team. And let me tell you, I think they have a well-defined investment philosophy, and they have done things right in terms of picking up the right scripts. They have the right set of fund managers now, and whatever they have done has played out really well. So it's a very different game when you are a fund manager. Sometimes, let's say three of us are there. Let's say Vishal is momentum, I am growth, you are value. Or let's say in growth also, we both are picking some different baskets. So, it is very much obvious that sometimes my things will play out, my stocks will play out, sometimes your stocks will play out. But I'm saying Motilal as a house, has emerged in last couple of years, one of the best house in terms of the performance was they're showing. But 2-3 years back, it was Mirai. Prior to that, it was SBI. And prior to that, so what I'm saying, there's a rotation which always happen. But in the long term, one should not put money because they're looking at 57% return. They should look at whenever you want to participate, make a basket. Any index fund, large capish index fund is capable of delivering 12% return to you over long term. A mixed bag flexi cap and a focus or multi-cap fund is capable of giving up to 14-15% to you. A mid-cap fund can give 16%, or a small cap fund can give 16-17% to you. This is what you should look at in a long term. There can be 1 year which can be very good. We all have seen, and I can tell you 2017 calendar year return, I'm talking about 7 years back. Calendar year return for small cap index, index was 57%, and for mid cap index was 48%. Calendar year return I'm talking about. And what happened in 2018? Long-term capital gain as well as reclassification of category by SEBI has come. And the next year return was almost minus 67% on small cap space. All I'm saying is there can be a year which is really very good for the fund, but at the same time should not participate because all your eggs in that basket, because you should always diversify across funds. And it's a good fund portfolio, is really good, Motilal Midcap and whatever funds you have shown. But diversify, as that should not be a benchmark for you to participate and invest your money there. You should always look at 14 to 15% of overall yield in your mutual fund portfolio in a long term.
Vishal, comment on this because essentially what I'm taking away is we've seen outsized returns. Don't let that spoil you. And also comment on the flexi cap category as well, where again Motilal Oswal has stood out with the top gain of about 46% or thereabouts in the year gone by. What's working for this fund house according to you?
So a few things clearly have sort of worked for them for the last 2 years, because if you look at across categories, they now are at the top in most cases. So one is that they have identified certain sectors or themes that they believe are going to be beneficiaries of what's happening in India, and they've focused their stock selection in those sort of sectors. And the second thing they've done is that they have followed a clear style towards growth, and they've been beneficiaries of momentum as well. So I think all of this combined together has worked very well for them. I think what we need to be aware of is that momentum as a style also does extremely well when markets are doing well. And there will be periods like exactly like Kshitij mentioned that things will not always be heading upwards, especially if you start to see earnings slow down. And therefore, what suddenly then ends up happening is that you end up getting the reverse challenge with momentum, which is that the momentum works against you because markets are falling. So I think we need to be very, very mindful of that. Uh, we need to remember that rolling returns are probably a much better indicator of consistency and long-term performance than trailing returns. And even trailing returns, which are taken for longer periods of time than 1 year, will suffer from the bias of the point at which they start off with and the point at which you're measuring. And that's why looking at 3 year and 5 year rolling returns does tend to be a very, very good approach to take when you're trying to measure consistent funds.
So take this as a starting point and also look at those other data points. The last category that I want to talk about today is the sectoral thematic fund. And the reason I kept it for the end is because there's so much that we've spoken about over the course of 2024 that really it's only a matter of perhaps having a little bit of caution heading into the new year, Kshitij. You have the LIC Mutual Fund Infra Fund, which has stood out, Quant Commodities Fund that also gained quite considerably, and the Kotak Pioneer Fund. I thought that was an interesting runner-up, bronze medalist, if you can call it that, in 2024 with gains of close to 30%. What stood out for you?
So I think, as mentioned by you initially when you were presenting about mutual fund data points, how many NFOs, almost 65,000 crore plus of AUM gathered in these NFOs in this category. Now, obviously, there was a gap between AMC houses in terms of the offering that they are having as a basket. But at the same time, this is in fact a little bit more high in terms of its risk return metrics vis-a-vis small cap also, I must say this. So this can be 5-7% as a part of anyone's portfolio, on higher side 10%. At the same time, what you look at right now, like one can clearly make out there's a correction on defense portfolio, there's a correction on the PSU portfolio, there's a correction on the consumption portfolio also. But at the same time, what is right now, if you want to participate also, then look at sectors which are looking up. Let's say manufacturing is now become an evergreen sector, or let's say pharma seems to be a little defensive and is looking up, or maybe healthcare as overall sector. So my what I can make out from this is that because everybody was looking at the type of return what has these sectors have given in 2023. If you remember, a 1 year return for HDFC Defense Fund was 94%. All the PSU funds were having return in excess of 60-70%. That's why it has attracted so many of investors and so much of money. My only submission here, a lot of people watches us, that return is important, but that should not be a criteria for you to put money going further. It should be one of the criteria for sure, how's the performance is.
Yeah.
But at the same time, you should be knowing that when you are entering a multi-cap or a flexi cap or a mid-cap fund, still a fund manager has a choice to look at a mixed bag of stocks. But when you are having a sectoral approach, they have to participate in that sector only.
Right.
So you should not enter at a peak of a sector or a theme, and then you have to wait little long in gestation increases for your return.
Certainly.
So one has
Certainly. Kshitij, very well made point. And in fact, that is the perfect end to this program. Kshitij, Vishal, thanks so much for taking the time today, and wish you and your families and your teams a very, very happy 2025. And that brings us to the end of this edition of the Mutual Fund Show, and I encourage you to stay tuned. There's lots more coming up on NDTV Profit.